So, um, bear markets take a long time to unfold, and we've been going on since, depending on the type of stocks you're looking at. Small caps rolled over, kind of November, December. The large caps rolled over January. We are making a series of lower highs and lower lows, which is the definition of a downtrend, but we're still within the kind of allowance of a stock market to fluctuate. Right now, we're still in just a correction. It's a deep correction, but it's not a reversal.
Probably one of the most crazy weeks we've seen in a while for all markets, especially the gold and silver markets, and also oil. We're seeing the price of gas just skyrocket. Trying to get gas here and there, and then you're seeing the prices just rise as you're riding on the road. So your perspective on this crazy week, let's start with gold. We've seen it go up, down, crazy volatility.
Sure. All right. Well, let's just jump to my charts real quick, and I'll kind of give you the visual walkthrough of what I'm seeing. I think one of the best ways to look at more so gold is the quarterly chart. It gives you a big picture view of the major trends, the bull market phases for gold. And you can see we have these bull markets, and then commodities go out of favor for a long time. Another bull market into the 2011 top. We've been out of favor. Now in 2019, gold started a new bull market, and here we are threatening and starting to break out on the quarterly chart. So this is pretty exciting. I mean, this is new territory. This is a breakout for investors, for precious metals, or for gold at least here. And it's pointing to a lot higher prices. And that is a good sign. Now, if we were to look at the daily chart, as you mentioned, it has been all over the place. It has been a wild week. And if we were to just kind of look at the recent price action, we did start to see gold rally. And then once the war kind of took hold, we saw a big spike, a huge wick. And then really we've seen it take off since then. So there's definitely, about 100. There was at one point about $140, $150 premium put into gold because of the war. And it's really created a stampede of everyone moving to gold as a defensive war type of play. So we've had huge volatility. It actually became very kind of overbought on the short-term basis a couple of days ago. I could just sense it. You look at the charts, you look at the emails, the phone calls I'm getting. Everyone is piling into the commodity space, and this touches on everything, including crude oil. Everyone seemed to just run to the commodity space, and it drove all those markets up really big, which you and I'll touch on these charts. But when you get that surge, it's usually very short-lived, and we see a very sharp pullback from those levels, and that's what we're seeing now. The last 3 trading sessions, gold has pulled back quite a bit, along with other commodities, and that to me is just because it was a crowded play. It was news-based. It went parabolic, and pretty much most commodities, if they are testing resistance levels, and so they're selling up at those levels. And so the market's just trying to work off that kind of, sentiment shift of everyone running in the same direction. It's got to shake them out, I think, before these markets go much higher. We haven't quite hit all-time highs just yet based on this chart, but you can see we're getting up close. You could argue this might be a double top for a little while. I do think based on the quarterly chart, the momentum is clearly to the upside for gold. I think we could see this potentially trade sideways or lower for a couple weeks, maybe a few months. But overall, I think we're going to continue to see quarter after quarter gold continue to pick up speed. And based on the quarterly chart, the next upside target is about $2,600, $2,700 an ounce. So, I mean, remember, a quarterly bar is 3 months. So we're looking forward potentially 6, 9, 12 months, but I think we could hit that target pretty easily in that time frame.
So definitely a trend shift for gold. Are there any price points that silver has hit that shows that silver is on an upward trend as well?
Sure. We'll take a look at the quarterly chart real quick, and you can see silver is quite the beast. It typically kind of lags a little bit, and then suddenly it pops and takes off. And we've seen that in the past. Right now, it has got a very similar pattern to gold in that it's had a very strong rally. It's been consolidating for the last several quarters, building what is a bull flag. And a break to the upside is going to point to dramatically higher pricing. And just based on this recent quarterly pattern here, we're looking at silver running up to roughly the $40 mark, which is also where we had a couple big wicks back in 2011. also back here in 1980. So this is definitely going to be an area where there's going to be a lot of overhead resistance. The momentum behind this move will be running out of steam at that level as well. And there's going to be overhead supply sellers. So, that's kind of the next major move where silver could pop and really surge into there. And the question will be, what does it do? I mean, a lot of people are talking about 70, 80, $120 ounce silver. You never know what's going to happen. I mean, we've seen other commodities jump like 50 or 100% in a day or two recently. So anything is possible. But based on conservative chart analysis, this investing time frame, we're looking at $40 silver potentially in the next 6, 9, 12 months.
So that's definitely a larger move for silver than probably gold would make in that time frame.
Yeah, so for sure. Yeah, gold, trading at 2,000, going to 2,600, much smaller, half the move. So a big difference there. And silver's always like that. It's much more volatile, but gold is more stable. It's seen as a global safe haven. Silver is kind of like sometimes I call it kind of like the late bloomer. Everyone wants to pile into precious metals, into gold and gold miners. They're more stable. And then when everybody finally believes in the precious metals move, a lot of people will jump into silver because they want to use that explosive power and they can drive the silver market very quickly to the upside. So it's kind of a late bloomer. It'll pop and take off. But gold is kind of like the steady Eddie. It'll just be more consistent because globally, people, when they get nervous, they start to accumulate gold, and that makes gold lower volatility, less potential, but more stable. There's always a trade-off, risk reward, right?
We've also a bear market. What kind of price points or signals are you looking for to confirm that? Because if I look at like a chart of the Dow, it seems like very clear we're making lower highs and lower lows. And often when we see a crash, it doesn't happen all at once. So you see kind of a rolling over, and then, it takes a little bit of time to really get to that bottom. So what kind of signals are you looking for in the general stock market to confirm that, yeah, we are in a bear market?
Yeah. So bear markets take a long time to unfold. And we've been going on since, depending on the type of stocks you're looking at, small caps rolled over, kind of November, December. The large caps rolled over January. We are making a series of lower highs and lower lows, which is the definition of a downtrend, but we're still within the kind of allowance of a stock market to fluctuate. Right now, we're still in just a correction. It's a deep correction, but it's not a reversal. So the stock market could very easily recover from here. And that's why I've been talking with subscribers. I'm like, listen, we're at a really major tipping point where the stock market could actually rally and have one last huge push, a euphoric stage. And we could see about a 20 to 30% rally in the SP 500. Or it could break down here and we could see, a 15 or 20% drop even further or more from where we are. And that's what we've got to see. We're at a tipping point where I like to look at a lot of different technicals. The weekly chart I find is very powerful for identifying trends. I like to also compare what the stock market is doing to other asset classes, gold and utilities, bonds, all kinds of different things like that. And when more or less the stock market is underperforming everything else and we have a breakdown on the charts, that's when we click into a bear market. And when we click into a bear market, it doesn't mean we're going to just sell off right away. Believe it or not, we'll actually see the market go into a bear market, and then it could actually trade sideways or slightly higher for 3-6 months or so. And that's kind of like it's kind of like the pause before the storm, like a calm before the storm. Everyone's kind of buying this, thinking this is a buy the dip. They don't realize it's actually a distribution phase, and eventually it's going to roll to the downside. And then that's when the real downside to the bear market starts. And bear markets can last, potentially a year or 2 years going forward. And they take a long time to unfold. And it's a painful process for those who watch their assets go down. And there's a lot of way to make money when the market goes sideways or lower. So this is a huge opportunity for those who understand how to trade ETFs that can rise in value when the stock market falls, take advantage of commodities. I think there will be specific commodities that can still do well, precious metals probably being one of them. So yeah, it's a process turning into a bear market, and it'll take time.